Good morning, everyone. Thanks for attending the presentation. Rio2 are sitting on a project in Chile, advanced explored resource, reserve. We're in a permitting phase, ready for anticipating construction approvals in 2021, mid to late 2021. So a little bit different from Strike Point. So the team is situated in Canada, Peru and Chile. Our main office is in Peru, where we have got the same guys that we'd used in Rio Alto. It's a strong, cohesive team, worked together successfully for the last 12 years. The project in Chile is in the Atacama, just east of Copiapó. We have a small team doing geological work and preparation work. Our main core shack is down there in Copiapó, and the team there are sort of preparing for this summer's activities. Oh, there we go. So, so the argument for Rio2, I guess we like to centre it around the oxide gold resource we have, one of the largest in the world, 5 million ounces in resource, relatively comfortable location. It is at altitude, but the terrain is very workable. Compared to our experience in much steeper, much more vegetation, much wetter locations in Peru, here we have this location here is our leach pad, large leach pad project. The mining mineralised zone up in the top of this hill, it's a volcanic breccia and crushing station conveying to leach pad. The construction will be cheap, the construction will be quick and very simple. To that end, we've proposed a fast track. Our recently published PFS study has a reserve of 1.8 million ounces of the resource of 5 million. We've kept that reserve at that number so that we can fast track permitting primarily. Being in the Atacama, water is a major bottleneck or an issue to develop mining projects. We have a solution to that hasn't involved any environmental permit requirements. Our PFS, typically we're mining engineers, we don't like to be wrong. We've been fairly conservative in our PFS. We've used cost structure probably significantly higher than what it will be, certainly at the high end of all of our estimates. We've used the recovery values middle of the road for all of the metallurgical test work we've done, and we think our PFS is probably in the low end of what our outcomes might be. Platform for further growth, we're ambitious, we're actively in the M&A space, and we're also very very conscious of changing the large resource, more of it into the reserve category and putting it through the process one day. We want to be a consolidator in the precious metal space, and we have the capital markets credibility with our history at Rio Alto. Batteries might be fading on me. Maybe if I try this one. Oh, there we go. Oh, too many. So the team, our board of directors, Alex Black, led Rio Alto, very successful story. Acquired a project La Arena from from IM Gold, sorry, and I constructed that project in 2009, 2010. We sold that company for 1.1 billion to Tahoe in 2015. Klaus, our chairman, Albrecht, been working in Chile most of his career. He was CEO of Atacama Pacific, who Rio2 acquired the property from. The property was named at that time Cerro Matacunga. We've rebranded to to distinguish ourselves from the many other Maricunga projects in the region. Drago Kisic, an economist based in Peru, in Lima. Sydney in Toronto, lawyer. Ram in Toronto also. Governance, was chief of Ontario Tax Commission. And Dave Thomas, mining engineer. A good spread, good diversity in our board. A lot of history together with this team. All of us the same group that built the La Arena and Shahuindo projects in Rio Alto. Capital structure, 180 million shares on issue, fully diluted 240 million, 19% with management and insiders. The usual suspects, Eric Sprott and Van Eck, are supporting us. And then we have a 60% other, trading about 250,000 per day, reasonable liquidity. So the project in Peru and the company in Peru is Fenix Gold, renamed from the Cerro Maricunga project. Situated about 140 kilometres east of Copiapó. Copiapó is a significant mining town, about 150,000 people. All of the suppliers are there, all the equipment suppliers, reagents, and people resource. A lot of mining in the area. The famous 33 trapped miners, that location was only about 40 kilometres from Copiapó. So we think we're in a very resource-rich area to build a mining project. The access up the hill to our project is on a National Highway 31, which goes right through to Argentina. Paved road, good access all year round. There's a 20-kilometre site access road coming in through this corridor, and then the project is this dark green area in the middle here. So couldn't really ask for a better location in terms of resources, people, suppliers, and we have power nearby, water being the question mark. We've solved the water issue. I'll give you some more detail on that in further slides. Just a little on the neighbourhood. So our biggest neighbour would be these guys down here, Caspici, Serra Casale, Barrick, Newmont joint venture, over 15 million ounces. We've got Kinross here in La Coipa, Lobo Mate, and Refugio, or Maricunga was the name of this project also. Refugio's on care and maintenance. La Coipa's in process to start up again for a phase 7. These are all sulfide gold mineralizations. Volcan La Pepa also, Yamana and Hochschild, all sulfide mineralizations, Refugio also. We stand out a little bit in that we're a pure oxide deposit, very high in the sulfidation profile, very little sulfur, no copper, no mercury, very clean for cheap leach processing, and also environmental impact of waste dumps, no acid drainage or mercury issues to speak of in this deposit. Got a 16,000 hectare land position, key infrastructure I've highlighted, the water agreement we have. So we're treating water like any other consumable. We're trucking it to site like any other consumable and purchasing it from a supplier fully licensed, so we don't have any environmental exposure to our water consumption or our water access. The place is well drilled out. The Fenix deposit's well drilled out. Coming to our block model, there's, like the previous slide said, 115,000 metres of drilling. Our project to date, our reserve project right now, is this blue line, this blue pit. There we have 1.8 million ounces in conventional open pit mining methods. And important here to note, we've got good grades from surface. So when we do start mining and leaching, we will have grades from day one no pre-strip, no capital put into bulk waste movement. This black line is our resource outline. We've constrained the resource to a $1,500 gold price. This is our opportunity, and a lot of our work in the next few years as we push this project through permitting and to a construction decision. We'll be working on developing this opportunity as well. In plan view, wide mining areas, conventional open pit mining, big equipment, and little dilution. So again, back to the opportunity moving forward. Measured and indicated category resource, 5 million ounces. Proven and probable in our most recent PFS, 1.8 million ounces. There was a previous PFS, which I'll highlight the differences on the next slide. So we see a lot of potential here to improve on the economics that we've presented in the recent PFS. Mineralised to great depth, finely disseminated gold-hosted breccias. There's no visible gold here. It's all fine-grained in laminated black quartz veins. The advantage of fine-grained is it's amenable to leaching. The leach kinetics are very good. 100% oxides, no copper, no sulfur, very clean. A little bit on the geology for those that understand the language. So that's what it's all about. There's all those ounces are contained in very narrow veins in a breccia, volcanic hosted breccia. Low sulfidation horizon, again negligible copper, sulfur, mercury, very clean, and no transitional material. So at depth down to 600 meters, we don't see any transition to sulfur. Any reduction in recoveries, the 75% recovery that we've used in our model is good right through the full depth of the pit that we've identified, and the resource we've identified to the deeper 1500 pit. A little bit on the engineering to date. This is obviously a constant work in progress, aiming to make improvements. The pits here, stockpiles, leach pad. So we've developed a mine plan that's got 16 years life. That's 12 years mining and 4 years stockpiles. The initial grades are a little slightly elevated because we're putting low grade onto a stockpile. We plan to produce about 7 years over 100,000 ounces. After that, the average comes to about 85,000 ounces to the life of project. It's unique in the Maricunga. Those other projects all have complex metallurgy, sulfides, tails dams, these sort of things. We're unique in that it's clean, simple, 100% leach for life of mine, no transition material, no tailings. We're able to bootstrap this startup. So our initial capex, we're looking at around 100 million, actually 110 million, to get into production around Q1 2022 is our plan. And then our solution for water is bringing it to site like any other consumable, and having a fleet of trucks coming up from Copiapó, where we're just purchasing water like a consumable. I'll get into some of the benefits or some of the upside work that we've been doing to improve on these numbers. But so historically, 2014 there was a PFS. A large project was identified, 300 million tonnes, with a 400 million capex, producing about 230,000 ounces per year. That had a large demand for water supply and a large capex. We wanted to sort of see if we could come up with a mine plan and a project development plan that was much more in our ballpark of something we could finance as a junior company, and something that would be a good foundation for us to further develop here, and then also give us a good position for further M&A or exploration work. So our project, as recently published, 115 million tonnes, higher grade, from 0.4 to 0.49 overall. Lower strip ratio, 0.81 compared to a 1.7. Much less waste, much more economic mining, and a significantly lower capex. We're down to 110 million down here. So we think we can get this going in early 22 for first production. And that's sort of the highlights from that slide, I think. We've done all this work at 1300, so fairly robust there as well. We're consistent with our theme of staying conservative in our numbers, and we want to achieve what we say, and we say what we're going to achieve, and we achieve it historically.
Yeah, we've been having some screen problems. So.
Okay. Alrighty. So on the back of this 2019 PFS, some of the sensitivities sensitive to gold price, we used a 1300, looking up at 1400, we go from a 27% IRR to a 36% IRR, adding about 60 million to the NPV. Not so sensitive to capital, an increase in 10% in capital costs. We go from a 27% IRR down to a 24% IRR, still fairly robust. Quite sensitive to operating cost. All in total operating is about 1.2 billion. 10% reduction. We go from, again, a 27% IRR up to a 35% IRR. So quite good incentives there in our project improvement plan. Just remember that 1.2 billion all-in cost. So our water solution is trucking water 140 kilometres from Copiapó. We have a fleet of 25 trucks doing 3 trips a day to achieve the volume we need of around 25 litres per second on the project. We've identified other sites closer to us where we can truck water from. We've also, in conversations with our neighbours on their projects, the ones that are starting up or considering starting up, particularly that Norte Abierto, where they're 15 million ounce deposit. They're considering syndicating with guys with desalination plants and constructing a pipeline. All those things will reduce our water cost or make available much greater volume of water at a good price that will assist us in developing our project and developing our reserve and adding a bit more of that resource into the reserve category. We're also in process of reducing costs in power with discussions with our neighbours that have existing substations available to connect to the grid. The numbers you saw in our PFS are all based on diesel generator power. Low risk, not requiring deals, not requiring third parties to participate, but expensive. We think by the time we get to construction we'll have alternate operations, and so we hope to present upgraded cost model PFS level over the next 6 months. So back to just to wrap things up, what we've done on site since acquiring the project in the last 12 months, we've re-logged, we've drilled 7,000 metres last summer, that's the Southern Hemisphere summer. We've revised resource estimates and we've upgraded PFS for a new reserve. We're in process of improving our water options. We've completed our baseline study and we're in process preparing the environmental documents for submission in February 2020. We anticipate a 15 to 18 month approval process there. This summer we're also doing some geotech work and a little bit more metallurgical testing. All of that goes towards CapEx, OpEx optimization, improving the operating cost, reducing CapEx at the startup. We think we have some opportunities there, significant opportunities. Project finance options will start in late next year into 21 on construction finance options. We'll start strategizing and seeing how we'll do that and also who wants to be involved with us. permitting activities always ongoing. So far, we think we've got a fairly straightforward project, easy for the authorities to understand, very conventional open pit. Chile's a mining country. We've had preliminary meetings with authorities in the local province and at the national level, and all the indications are very positive. So I think, thank you very much. Any questions?
Thank you very much, Tim.